they comply fully, particularly for their long-term sustainability.
Okay, thank you. What about the challenges? What are the challenges startups face in that's fintech startups? What challenges do they face in Africa? More like the
One of
main
the
regulatory challenges.
one of the things I have come across in my service provision to startups is that it's not the unwillingness to comply with regulation, but the lack of understanding of the scope of those regulations. And if you understand how startup funders work, their excitement and enthusiasm is about the innovation and technology they are developing. So most of the
Okay.
time, they spend much time on building amazing solutions, solving customer problems, and then making sure that those solutions are ready for market. But in
Mm,
that process, they largely forget that those solutions may be regulated. So they needed to devote the same equal time to understanding the regime for those innovations and be able to comply with it. So you get a situation where innovators now develop the solution and now are expected to go to market, and then they realize that that solution is not even permissible. So the challenge largely has been the first steps first, understanding what is the legal regime for the kind of ideas and innovation you're looking at. Once you're able to cross that bridge, it becomes easy for you to be able to build a roadmap either internally or procure the services of external parties like lawyers, like tax consultants, like HR consultants, and alike, to be able to guide you through the regulatory demands that are on your business. So because of the lack of that first step, which is understanding what the regime and the frameworks are, we mostly start up way into their innovation, now having roadblocks because their innovations cannot be permitted to be on the market, and then frustration starts to kick in. So for me, that challenge has been a challenge of the entrepreneurs themselves, because largely the laws are a bit certain. We know what the requirements are, even though they change over time, the frequency is not as rapid as you expect. So it is incumbent on innovators to make sure that before they even begin to think about an idea, before they begin to put in work to develop and design, there is a clear understanding of what the regime is and how they can build an internal system to support compliance. If not, we'll always come back to this conversation that regulations are not favorable, regulations are not promoting innovations, but largely regulations are in place for a certain reason. And those important, those reasons we all agree. So it is for us to align our innovations to those regulations by first understanding the scope and then building up a system to be able to drive compliance.
Okay, so how do these regulatory requirements vary across African countries?
I know for a fact that what we do not have is a unionized or a harmonized regulation for all the 54 or 53 African countries. Each country has its own regulatory demands. Now, largely, some of these demands may be informed by the country's own history, norms, and values. So or the political objectives that the country want to achieve. So I give you an example. So if you look at the Ghanaian example of who can participate in the fintech space in terms of ownership, there's largely a local content demand, which requires at least a minimum of 30% ownership of the fintech company must be a Ghanaian. That is a decision taken by, for instance, the state or government as to how we regulate participation in the space. That decision may not be the same as maybe in Nigeria, in Kenya, in South Africa, or in Egypt. So largely, the influence of what becomes a regulation is driven largely by the political objective or the state objective of each of these countries. We may never have a chance where we have a uniform regulation across Africa. But what we are beginning to see is a certain level of similarities between how fintech innovations are regulated. So you see central banks beginning to establish very specialized and unique, that have the special skills and understanding of the technology space to regulate some of this innovation. In the process, you see special laws that are being made as to how licensing requirements and license procurements are done, which categories are available for fintech companies to apply for, and how or what permissible activities they are allowed to engage in. So that kind of similarity is what we want to see, because what it does for the fintech company is that it allows them to easily go abroad, like you say. So for it's easier for now a Ghanaian company, fintech company, to be able to go into Nigeria, to be able to go to Kenya, to be able to go into South Africa, because largely the rules around how fintech activities are regulated are having certain common feature. So in terms of compliance wise, it becomes easy for those fintech companies to be able to plug in and be able to work within those countries. So those commonalities are what we expect to be enhanced, are what we expect to go on in terms of new regulations and new legislation. But to be able to have a uniform law that provides for how all fintech companies across Africa should manage, I do not anticipate we are anywhere close to that. Yes, after a year, we preaching the benefit of it and expecting that certain common commercial rules will be established to enhance business doing across the continent. But
Okay.
we will not be anywhere close to having a common and same regulations in all countries across Africa.
All right, now let's look at the importance of regulatory compliance. Why is regulatory compliance crucial for fintech startups?
If you are a startup founder, and this is a question you for instance have to struggle to answer, or have to spend time in understanding, then I think there is a basic difficulty, because for every business enterprise, you must understand that there are rules by which the enterprise is permitted to be in the market, to grow and expand and become sustainable. And there's never going to be a time where there will ever be any business venture that the lawmaker or governments across the world will say is unregulated. So
Hmm.
to be in compliance with regulation is the soul of your business. That is what gives you the permission to be out there. That is what gives you the permission to provide the service you provide, to provide the service you provide. That your innovation must be on the market, that your innovation must be used by multiple people across multiple jurisdictions, that you must attract the right customers, you must attract the right stakeholders in terms of investors, in terms of creditors and persons you work with, then regulatory compliance must be top of your to-do list, because that is the only way people will understand that you are running a business that, excuse me to say, is not a scheme set up to defraud or to unduly benefit from the use of technology. So regulatory compliance is core, is a fundamental of every business enterprise. Whether you ready for it or not, it is what it is. Either you
Hmm.
comply or you are out. And we've seen examples of non-compliance and their effect on businesses across Africa. Most of the fintechs we've seen today, which we knew yesterday and are no more in existence or are no more operating, largely has been due to compliance issues. If you can't comply, the regulators are there to enforce it. They will not give you a pass for non-compliance. So if you think sustainability, if you think business growth, if you think long term and you want to be in business, then your commitment towards compliance must be key. There's no if, no buts to that compliance question.
Now let's talk about trust and credibility. How does compliance
Mm.
impact that's the trust and credibility of a fintech startup?
I think one of the key things for any financial service provision is trust. because don't forget, it's people's money. I have made my money. I've worked hard for it. You want me to either save it with you, or you want me to use your platform to transact businesses I ordinarily would do. If I don't trust that you are credible, that you have what it takes to be able to deliver that financial service for me, that when I give you my money and I need it, you'll be available to provide it for me, then there's going to be a challenge of customer acquisition. And that challenge is further complicated due to the nature of fintech companies. Prior to the fintech revolution, we know banks were bricks and mortar. So I could walk to a branch of a bank and see the bank operating. But today, fintechs do not necessarily have to have offices across the country.
Okay.
Everything is done online. So there is that level of how do you call it? No visibility for a frontline enterprise as far as fintechs are concerned. So if you do not use compliance to build that customer trust, it will become very difficult for you to be able to acquire new customers, to get people to use your solutions, and for you to generate revenue and then finally become profitable. Because the only thing that regulatory compliance does for you, it gives you a certain seal of approval. And we've seen regulated in recent times come out with lists of companies that are engaged in various kinds of activities that are not licensed or were not permitted to be engaged in. Once you have some of those non-compliance notices about your business activity, trust me, you gradually are losing the customer trust. And even when you fully become compliant, people have doubt about whether they still want to deal with you, because it's people's money, and people's money largely is people's blood. So you people will not willingly give their blood or give their money to enterprises that they do not believe have the seal of approval from regulators and are not in the good books as far as compliance is concerned. So if you really want to drive customer acquisition, if you really want to drive customer retention and be able to continue to provide the services you provide, especially in the financial space where trust is underlining benchmark for any customer relationship, then compliance is one of the ways by which you can strongly make that statement for the customer to be on board.
Okay, so apparently you've covered a little bit of the potential risk and consequences, but if there are any, what are the potential risk and consequences of non-compliance of fintech companies?
It's pretty straightforward. Now the regulators are very proactive. They deploy a lot of innovations and technology to monitor and supervise the financial space. So if you are non-compliant, it's easy to get the regulator to notice that you are not complying. And the risk you run is the regulators now have what they do usually, where they send out a list of companies either not complying or companies that have been penalized for some
Mm,
violation of the regulatory requirements. And once that is out, like I said, it affects your customer trust, and your reputation as an entity is put at risk, and you now have to do a lot of work to rebuild that kind of image. So the risk you run for non-compliance is for the regulator to flag you or highlight you as a company that doesn't comply with regulations, and the repercussions are clear. Customers now begin to either withdraw their services or look elsewhere. And as an entity, as a fintech company, you do not want to be subjected to that kind of public, more or less red flag as to what kind of activities you run.
okay. Now, looking at the key regulatory areas, can you explain the importance of anti-money laundering, that's AML, and know your customer regulations for fintech startups?
I think that The rationale for anti-money laundering provisions is quite a simple one, where we establish a known financial system, which is to facilitate the use of financial or the provision of financial services. It is for a reason that the regulator is able to monitor and understand who is using the financial services and for what. So where we have arrangements that does business outside of the financial services or uses the financial services for purposes which are not lawful, the anti-money laundering regime is to ensure that we are able to, one, detect some of those transactions, flag those transactions, and then put in mechanisms to ensure that the financial system that we've all established and are proud of is not used for other purposes than legitimate businesses. So for me, those requirements are very, very paramount to any business operation of a fintech company. And it starts with know your customer. And knowing your customer is as basic as understanding who the person is. And these days, we have national identification systems that have been linked to a lot of activities of individuals. So knowing your customer will help you understand who the person is, who you are onboarding as a customer.
We're still on, sir. Please go ahead.
Okay, yeah. And for what purpose the person intends to use the financial system, because financial systems will always be exposed to some of these unauthorized and unlawful use of money. And one of it is to finance counter terrorism activities and also more or less move illicit sources of funds. So for me, anti-money laundering and knowing your customer provisions as they relate to that operations of fintech companies are very, very important, so that what the banks, traditional banks over the years, we do not use technology to destroy. So it's so primary and so important that fintech operations begin to understand the importance of complying with anti-money laundering requirements and building a strong customer base with customers that they know, either by way of identification or either by way of understanding their financial profile in terms of the activities they've done over a period. And there are several technologies that can be used to assist fintech companies in doing that, so that at least we take out the bad guys, they say, from the financial system and still have a system that is fully robust and complies with regulations, not only locally but globally.
All right. So, are there specific licensing and authorization requirements, or if there are, what are they?
In respect of anti-money laundering,
Yes. Talking about
generally
key
anti-money
regulatory.
laundering provisions generally anti-money laundering provisions are one of the requirements forming part of any licensing category. So it is not a license you must acquire. It is a box you must make sure you don't just tick, but you are actively monitoring and supervising that your compliance is strictly in accordance with the demand. So regardless of the fintech licensing category that you have. So for instance, in Ghana, we have different categories, whether you are an enhanced, standard or medium, or you are a dedicated money issuer. Regardless of those license categories, the expectation is that money laundering can still be used across those platforms. So it doesn't matter which category you fall in. The expectation is for you to comply with the general requirement of anti-money laundering law. So there are no exceptions to the compliance regime. Every fintech company, every fintech license operation is expected to comply with those requirements. And those requirements are quite stringent because, like I've discussed already, the negative effects may compromise the financial system. Once you clear in the financial system and you any service offering along, your demand is to ensure that you are 100% complying with anti-money laundering requirements. So there are no exceptions. It's not for you
Okay.
to choose and pick because of your license category.
All right. So, how do customer protection regulations apply to fintech services?
Now, one of the major concerns for the various innovations we are experiencing today is how do we protect the customer? And it's been one of the key considerations for any central bank regulation frameworks and guidelines, because ultimately the systems are established for the use of the customer. So mostly fintech companies are expected to have a customer protection policy that regulates matters beyond just customer data to the use of the platforms, and in terms of how customer complaints are resolved, procedures to resolving the complaints, procedures around treatment of customers, customer service, and ensuring that the customer is prioritized in the design and in deployment of innovations. So look at it differently. If you are an innovator and you are developing solutions, you are developing it ultimately for the customer. So with or without regulation, you should have that customer at the heart of what you develop. You do not need a regulator necessarily to tell you that the customer is keen in what you are developing. All the regulator seeks to do is to reinforce that commitment, that innovators do not take it for granted, that it is more of profit than of customer service. So there's that requirement for you to have in place a customer protection policy, which clearly outlines how you want to manage your customer relation and also ensure that the customer is not more or less, how do I say it? You don't take advantage of the customer, and that you are not setting up to exploit the gaps that exist within the financial services. So largely you see customer protection policies, and if you extend it, the demands of, even for instance in Ghana, the Data Protections Act also gives certain level of protection to the customer in respect of the customer data you've collected, how you are using it, how you are storing it, and how you are sharing it, either with a third party for whatever customer services that you provide. So largely, the customer is extensively protected, and both regulations and the demands of the industry requires that stakeholders prioritize their interests as far as innovation deployments are concerned.
Okay, due to our limited time we have for this program, I'm just quickly going to rush through the rest of the questions. But first off, talking about strategies for achieving compliance, how can fintech startups leverage regulatory technology to meet compliance requirements?
I understand clearly that regulation compliance is quite a challenge, because it involves resources, it involves people, it involves money, the use of money and systems. But what we are beginning to see are innovations particularly dedicated to providing innovations for compliance. And I'll mention one great such innovation, which is MTech. So MTech has been able to build a compliance platform dedicated to understanding the needs and compliance demands of fintechs. What that does is that once a fintech company subscribe to such platforms, and I'm sure and I understand that the demands or the regulatory compliance may vary based on your license type, but whichever license type you have, it gives you an opportunity to automate that process. because what it does
Mhm.
for you is to now provide an opportunity for you to sit back and then get prompts and guidance as to when your regulatory demand is expected, what is expected, how do you comply? Because now what most fintech companies do is to rely on their own internal processes. Some are using Excel sheets, some are using notebooks, some are relying on individuals to be able to come up or remember some of these timelines, remember some of these requirements and the hows of how to comply. But with some of these innovations, we are beginning to see the automation of some of these processes. And the good thing for some of these innovation is also that over time they may be able to be plugged in into the regulatory side. So all the regulator will have to do is to log on to some of those platforms and see in real time your compliance metrics and your compliance level. So the use of pen and paper, books and files may be reduced, and people now will have their compliance in their palm, or it's on their desktops, it's on their laptops, and then it makes their work easier. Because, like I said, innovators do not have time, and their focus is not to spend time on the law, but to spend time on the innovation. So some of these RegTech innovations that we are seeing are so crucial to ensuring that we make regulation very easy to understand, easy to use, and it's also within the technology space. So people begin to appreciate how these innovations can easily become useful for their operations.
Okay. How important is it for fintech startups to have a dedicated legal and compliance team?
Uh, the reason why most people will tell you they don't do it, and not because they don't understand it's important, is usually because of the cost. And that's a reality. Everybody
Mhm.
understands that you need a lawyer or you need a dedicated person who understands the law as part of your enterprise and building up. But largely it's been the conversation about cost. So some of the things we do as law firm is to build a long-term relationship with some of these startups and fintech companies, where we understand their requirements and the things they need to do as fintech companies, build a remuneration or a legal fee payment structure that allows for building a long-term relationship than just being built today for what we should be due as lawyers. So for us, the relationship long term is crucial. It allows us to work with the companies in a manner that helps us also to understand the things they do better, so that we can also become the partner that provides support, highlight the red flags, bring them back to what the law requires, and also enhance their compliance for the long term. So
Okay.
compliance is acknowledged across board as critical and as important. Persons to do it are also acknowledged as very critical and important. It's the conversation around the cost of doing that. And we've been involved in managing and beginning to change how some of those relationships are built and leveraged for the compliance needs of the companies.
All right. Now, looking at collaboration and engagement, how can fintech startups effectively engage with regulators?
The regulator has a very difficult job of engaging with every single fintech company. But I must say that the Bank of Ghana has demonstrated the level of commitment, through the level of commitment they have to an open door policy of engaging fintech companies once there is a need for such engagement to take place. But one of the best ways to enhance that kind of engagement is the use of industry associations. So, for instance, in Ghana, we have the Ghana Fintech and Payment Association, which is supposed to be the umbrella body for all fintech companies, which
Okay.
umbrella body is by its mandate is supposed to be the advocacy or the mouthpiece of the concerns and feedback that members have, and then also the concerns and feedback that the regulator have. So more or less providing the loop for an engagement between the regulator and the industry. And being a member of such association gives you the advantage of using the association to be able to put across your concerns and get feedback as quickly as possible. Because it's an industry you cannot, as an individual, survive or be able to significantly change without the support of others. So such mouthpiece and entities, even like the Financial Inclusion Africa platforms and stuff like that, are very crucial and important in building up an alliance for how collaborations and feedback is entertained and worked on within the fintech ecosystem. And for me, that approach will bring up out a more feasible outcomes than every fintech company, more than 100 and more, each struggling to get the eye and the voice or the ear of the regulator.
Okay. Now, can we look at the benefits? What benefits do these fintech startups stand to gain from participating in regulatory sandboxes? And also, can you share examples of successful collaborations between fintech companies and regulators or in Africa generally?
I think that the rationale for the regulatory sandbox is simple, and this is it: that the regulator acknowledges that the frameworks they put in place may not adequately provide for every innovation in use case, because we acknowledge that innovation is developing at a faster rate than regulation. And the regulator does not want to go back changing its licensing regime every day or every week because there is a new innovation. So the smartest way to do that is to provide a gap framework, which is a regulatory sandbox, to allow for new innovations either by licensed fintech companies or unlicensed ones that do not currently fall within any of the existing licensing regime. And that has been used by the Central Bank of Ghana quite admirably. So I know that there is a fintech company that is not licensed currently that has a great innovation around buying now and paying later. And because of the opportunity of the regulatory sandbox, that fintech company has been given an opportunity to come into the regulatory space, be supervised by the regulator. Regulator uses the opportunity to understand the innovation and then build a framework to regulate it if it achieves or helps the regulator achieve the financial sector goal. And then that becomes a route through which new innovations can be brought into the market, because the
Hmm.
regulator may not be in a position at every time to provide for every innovation as far as regulation is concerned. And the regulator is also never going to allow innovations to go into market unregulated. So the sandbox idea and the use of it is a phenomenal way by which those gaps can be addressed between regulation and innovation, and also becomes a route by which the regulator may or may not either update existing licensing frameworks or come up with new ones to be able to accommodate emerging innovations and within the financial sector. So for me, innovation sandbox, great. What I've been advocating for and speaking about great lately is to make sure that those innovation sandbox do not become a cohort-based sandbox. There should be a rolling basis innovation sandbox where at any time that I have an idea that I think can serve the goals of financial sector goals, I should be able to apply. I do not have to wait for a period for an admission cycle to be open and then go through that process. It should be a rolling basis admission framework should be put in place to fast track the evaluation of the innovations that are submitted. Clear guidelines as to what the admission procedure is and what the evaluation criteria are should be put out so that parties can be well aware of what the
Mm.
demands are before applying, and then we'll be able to see how useful that innovation is to bring into market new innovations within the financial sector.
All right. Considering the fact that we're out of time, what future regulatory trends do you foresee that's impacting fintech startups in Africa, and what advice do you have for fintech entrepreneurs about navigating regulatory compliance?
One of the key and top gold mines within the current fintech space is how regulators can work around traditional banks leveraging their technology, their history, their customer base to become the new hotbed for new fintech innovation. Currently, it looks like there is that strict licensing regime around traditional banks and fintech companies. And each of these parties are competing for various licensing categories. And for me, if we want to see a game change in how fintechs are regulated going forward, we need to crack how, instead of giving licenses to fintechs are allowed to work with banks and riding on their institutional frameworks, their regulatory compliance culture, their IT support, customer base, to be able to develop new innovation without necessarily going through the central bank as a regulator. If we are able to crack that area, we'll begin to see a lot of collaboration between the banks and fintech companies, because fintech innovations will not, excuse me to say, it's going to be costly going forward to be able to come to market with innovations. And young people are not able to attract the requisite fundings that we've seen in some 2-3 years ago. So it means that a closer working relationship with banks will enable them to come to market quickly. So if that level of regulation is worked on, I think we'll begin to see some great innovations spearheaded under the said partnership between the banks and fintech companies, without necessarily going for new license categories as the current regime requires. And as to where the sector is going, one thing I can predict is that fintech companies will not replace traditional banks. Traditional banks will continue to be in existence. Rather, we will begin to see more close working relationship between the banks and fintech companies. But that close working relationship must be one that the regulator provides a framework for, so that the banks do not see fintech companies as competition, and the fintech companies also do not see the banks as competition, but see each other as collaborators to achieve the same financial sector goals. So if we are able to work on that, I think we will see a future where more convenience is enabled for the customer, because that's the end goal of these innovations that we are seeing. How
Mm.
do we enable convenience? How do we make sure that people are able to access in real time financial services wherever they find themselves? So players who have the capacity to bring innovation must be working together to achieve that, instead of working as competitors in the space, so that we can see real benefit for the consumer, and drive further financial inclusion across the continent.
All right. Thank you so much, Mr. Richard Numekeke, for coming on today's show.
Thank you
Hopefully,
so
we'll
much.
have you on the show once again so we can pick your brain a little further, since we didn't have that much time to do that today. Thank you once again.
Thank you so much for having me. I'm happy to be here.
All right. Have a beautiful day.